afternoon, good morning. We hope that you and your families are all well. On behalf of Pulsar team, we are happy to welcome you to our 13th Pulsar webinar entitled International Public Sector Financial Accountability Index, Challenges and Trends of Public Sector Accounting. The key objectives of this webinar are to present the key findings of the 2021 Index Status Report, discuss the common challenges and lessons learned associated with public sector accounting and IPSAS implementation reform, and discuss the role of the multilateral development agencies. In order to achieve the proposed objectives, we have a tight agenda and a group of renowned experts on the topic. I would like to remind you that all presentations, including their translations, will be briefly available on our Pulsar website. The session is also recorded in all channels, so if you or your colleagues are not able to physically join us, they will be able to listen to the recording later on. Please also feel free to post any questions you might have using your preferred language directly in our Zoom chat. Without further ado, I pass the floor to Daniel Boyce, Practice Manager for the Governance Team for East Europe and Central Asia, to share with us some opening remarks. Dan, the floor is yours.
Thank you, Dimitri, and welcome everyone, and good morning and good afternoon. I'm here to welcome you on behalf of the World Bank, the Pulsar FinCop, and the Pulsar EduCop, the two communities of practice. This is our 13th Pulsar virtual workshop, also known as a Smart Interactive Talk, which is organized by the two communities of practice for financial reporting and education of Pulsar. I want to thank everyone for allocating the time in your busy schedules and attending this event. Hope you don't hear too much noise. It happens to be the time of the grass cutting here at my house, so we have some people working outside. Today's topic is the International Public Sector Financial Accountability Index, Challenges and Trends of Public Sector Accounting. And we'll have the opportunity to learn about the findings of the 2021 status report firsthand from IFAC and from others involved in this. I think there was another session when this was first introduced, and now we have, I think, the first update. In June 2021, IFAC and CIPFA published the updated International Public Sector Financial Accountability Index, which is called IPSFA. It's kind of a hard one to pronounce, but the IPSFA index, his main goal is to collect and verify and analyze current financial reporting bases and frameworks used by federal or national and central governments around the world, while also providing an overview of public sector accounting and reporting trends. This is the second IPSFA status report and provides an update on the progress made since 2018 in implementing the accrual-based reporting. It gives a snapshot of the position in 2020 compared to 2018, and also looks ahead by checks the currently available data to forecast the position of the countries in 2025 and provide some indicative projections of their position in 2030. At the World Bank, we followed this closely, and we've been following up on the process of updating the status report. We're also producing different tools within Pulsar, as has been introduced in some of the other SITs. And we're keeping, I guess, keeping the momentum of this clear trend in terms of the transition from cash to accrual accounting and IPSAS implementation around the globe. As Armin will share with you later today, we are looking forward to continue providing support to Pulsar to maintain this momentum in the coming years, and also to support other countries in their efforts in implementation of public sector accounting reforms. Once again, we appreciate all the speakers, the guests, and the participants for joining us today. We hope you'll enjoy the event, and looking forward to seeing you in our next Pulsar webinars, which are kind of getting started now after we come out of the summer and start to have the series begin. And this is a good start to it. So back to you, Dimitri, to continue the event.
Thank you, Dan. Now I would like to invite Ian to share with us the key finding of the 2025 index status report. But before passing the microphone, I would like to mention that Ian might need to leave us briefly after his presentation. Thus, we decided to have a short Q&A session right after Ian finished his presentation. Jose will help us to moderate this session. Ian, the floor is yours.
So thank you, Dimitri, for introducing me. So if I can just make sure that you can see my screen okay. Good.
Yes,
okay.
This is it.
So thank you very much, everyone, for the opportunity to join you today to talk about the results from the 2021 update of the International Public Sector Financial Accountability Index. As Dan said in the introduction, this is the second update of the index, which is a partnership by the International Federation of Accountants and also the Chartered Institute of Public Finance and Accountancy. And I was involved in that with my work with CIPFA, which I still do for a quarter of my time, rather than my IPSFA chairman role, which is the other 3/4 plus of my time. It is the second time we've undertaken this process, and I think it's, you know, really to underline the fact that there's a lot of effort that goes into this process by a lot of different people, and I think we would like to acknowledge all the support that we received, not only from those who completed the returns for the report, but also from partner organisations. And I would in particular like to thank the Pulsar team and the WorldBank more widely for their support in terms of data for this update. We do really value the support we receive from those partner organisations, and I think that's part of the reason why we managed to expand the coverage to 165 jurisdictions this time round, compared with 150 when we did the first data collection in 2018. As Dan said, we collected the information focusing on 2020, that's the actual index. And then what we did was we did forecasts for where the team concluded jurisdictions would be for 2025. And you know, very much, I have to say, that was a judgment on behalf of the team, bearing in mind the available implementation information that we had in terms of project plans, track so far with implementation and so on. So there are some, you know, there may well be some differences between where jurisdictions plan they will be and where we estimate that they will be. And we have erred on the side of prudence. And then we have the projections for 2030, and inevitably, as with anything 10 years out, they are less susceptible to verification. So, you know, they're much more indicative, but I think still very useful in terms of the trends. We've looked at two dimensions, the financial reporting basis, and by that we mean whether a jurisdiction is reporting on accrual, full accrual, or cash, or somewhere in between. And that somewhere in between may mean that they are actually on the journey to accrual, or it may be that just actually in terms of the framework that they have for public financial management, that includes elements of accrual within that framework, and they may not be transitioning towards accrual. And that is a change from the original 2018 index. We had a category there, cash transitioning to accrual. And one of the pieces of feedback we had was, this is a broad range of countries, and it's better to call this partial accrual because it covers that range much better. We've then looked as well at the nature of the reporting framework that the jurisdiction is actually using, the extent to which they are making use of international public sector accounting standards. Now, those of you familiar with the IPSAS suite will know that the majority of the board's pronouncements are accrual-based financial reporting standards, but we do have a cash basis standard. And so where that cash basis standard is used, then you will see that a jurisdiction on cash may also then be using IPSAS because they're using the cash-based IPSAS. Finally, what I'd just like to say is that in line with our, part of our strategy is to support implementation of accrual and IPSAS around the world, and inevitably we are only one party in that. If you like, the IPSASB is only one party in that, but that's where it's very important working with partner organisations, again, like WorldBank, Pulsar, the regional development banks, and so on. And one of the outputs that is due later on this year from the work that the International Federation of Accountants is doing in that space is this Pathways to Accrual, which is an update of the current paper-based Study 14 that IPSASB published and is now 10 years old. We are moving that to become an online resource. So that should be available in test form later on this autumn. And that will include a lot of references to other relevant publications, including many of the excellent publications that Pulsar has produced. So that's the overall framework in terms of the index. Just a few of the challenges that we faced. Inevitably, the index is only as good as the quality of the information that you can obtain. And one of the challenges we did have was actually just getting contacts in the right organisations within ministries of finance or standard setters. And again, that's where we did rely on partners, or we relied on reports that had been recently produced. And that was certainly the case with recent work for Pulsar. It was also the case with the European countries where Eurostat had a recent study that we could draw on. One of the challenges we did face was the implementation of general data protection regulations since the original index, and that meant that effectively the contacts we collected for the 2018 index we couldn't use again for 2020. And then inevitably with this, there are just general staff changes. So considerable challenges there. In terms of the changes, I mentioned the refinement, for example, changing cash to accrual to partial accrual. We did make other refinements to the 2018 questions and tightened the questionnaire up considerably. So some of the questions that we had in the original 2018 data collection didn't actually result in particularly useful, consistent information. So we very much tightened the focus for the 2020 index. Back end, we have rebuilt that. That worked a lot better, I think, in terms of the implementation. We translated into more languages this time around. So the database returns was translated into French, Spanish, and also Arabic this time round for the first time. And I think possibly on an ad hoc basis, there might even have been a Russian translation, but I'm not sure. Dimitri can probably confirm whether we did that on a one-off basis. And I think, coming back to this challenge, which I'll talk more about in a minute, data verification is a real problem because we do need to make sure that we're not just relying on claims from jurisdictions, that we're actually looking for objective evidence of particularly the accrual status. And as luck would have it, we kicked off this exercise just as the pandemic was starting. So whereas we envisaged this as being a relatively short data collection exercise, it actually extended over the best part of a year. and became very much a marathon. And I think my fellow team members and I really felt at one stage this wasn't going to end, but we did manage to get to the 165 eventually, but there was a lot of work involved in doing that. A few words on data quality now. Very much what we're looking for is evidence of implementation here. What you tend to find quite often is jurisdictions will make a big fanfare about announcing accrual adoption and the move to accrual. Quite often, though, you find that the reforms, for some reason or other, and there are a variety of reasons, will take a lot longer than originally envisaged, or may even get stuck partway through the implementation process. So we are looking for actual implementation rather than that initial adoption, or maybe even in some cases legislation is passed but it's not implemented. So we really were looking for that definitive evidence really in the form of published accounts, and we applied the Sternis test to where accrual categorization was claimed. So what we were looking for was published accounts, being the Accountability Index, International Public Sector Financial Accountability Index. The ultimate part of that accountability is to publish accrual-based accounts, in audited and available publicly. And we did have to take some hard decisions in certain cases, and I know this impacted on probably a couple of the Pulsar countries, that we couldn't actually obtain copies of the published financial statements. And therefore we did take the decision from the team perspective that we would downgrade those to only partial accrual because we didn't have that final evidence. Now that's certainly something that on the website that we have, certainly if jurisdictions feel that the attribution is incorrect and can provide the evidence on the website that IFAC maintains, that's certainly possible to change that. So I wanted to make that point, also to underline the difference between forecasts for 2025, where we reviewed the evidence available, and the projections for 2030. So 2025, much firmer and a judgment from the team, 2030, much more indicative. Certainly in terms of the framework, there are judgments involved in that. It's often quite hard to really determine without a detailed study and discussion directly quite the way in which international public sector accounting standards are being used, particularly some of the shades between indirect adoption and usage within the general standard setting framework. So a lot of data quality challenges, and we tried to be much more consistent, but also harder in terms of some of the judgments. And the resulting overview, and I'll look more at the Pulsar countries shortly, is that picture. So 30% of jurisdictions, again emphasizing this is national, federal, central governments, it's not municipalities, it's not state. 30% of governments reporting on accrual in 2020, 30% at the other end of the scale on cash, and 40% somewhere in between. And if you look at that map, you can see that certain areas of the globe are still not well covered. We still have challenges in data collection in Africa and the Middle East, and those, as I'll mention, will be very much areas for future work. And that figure of 30% on accrual was an increase of 6% in the 2 years since the original index. The frameworks, as I mentioned, the question is, how are IPSAS actually used? They can be used directly, so it is the standards as published, albeit that there are choices within the standards, and therefore the country is selecting the policies from within those choices. That is direct to IPSAS adoption. The IPSAS can be modified for the local context. So very often what you see is the standards subject to some form of local review and endorsement. And you see that process, for example, if you go to the Philippines, they currently have Philippines public sector accounting standards. Those are IPSAS. And they have been subject to a local review, but in most cases through that process, they remain very close to IPSAS, even if the local jurisdiction has, through that endorsement process, taken control of the financial reporting framework. You have the third category of national standards with reference to IPSAS, and that covers quite a wide range of approaches, but it is adopted in a number of jurisdictions where they draw on the standards to create their own, and examples would be, for example, Brazil and Indonesia as well would be going through that route. Then you have a few jurisdictions that use IFRS and then modify for the public sector. In some cases, that actually brings you very close to IPSAS because the IPSASB does draw on relevant IFRS in its standard setting work and then goes through a clear process of adaptation, interpretation for public sector. So, you know, if you look at my own jurisdiction, the United Kingdom, actually, although that's one of the three on IFRS adapted for the public sector, actually through external surveys, that comes out at over 95% compliant with IPSAS at both central and local government levels because of that process. And then you have a group of countries on other national standards, and that does include a number that actually use the US Governmental Accounting Standards Board standards. So that's the picture for 2020. If we look then at trends going forwards in the report, that's the trend that we see in terms of accruals. So you can see that 30% for 2020 moving up to 50% forecast for 2025, and then above 70% for 2030. And you see a parallel trend in terms of the degree to which IPSAS are used in that adoption process. So that's the picture at the moment. I showed you those 49 jurisdictions on accrual for 2020. It changes as we move through to 2025. 83 jurisdictions will be on accrual at that stage. And you can see increases in that pale blue segment, direct usage of IPSAS, also in the indirect usage of IPSAS, and also in that green segment where they're using IPSAS in some way within the standards framework. No changes there of any substance in the other two categories. And then that trend continues and increases through to 2030. So you can see much more IPSAS becoming the globally used standards around the world. And if you look at the regional trends, you will see similar sorts of trends present. So if I bring you back then to the pulsar countries, so that was the overview as recorded in the index. As I say, we did make changes because of that, not having access to the accounts, I think in 2 cases. But you can see that's the picture. If we look going forwards, that forward trend of increasing movement towards accrual, and you can see strong upward trends both projected for 2025 and through to 2030. If you look at the usage of IPSAS at the moment, relatively little, just one country using national standards with reference to IPSAS. That picture changes for 2025, and then it changes again for 2030. And I think that is really important. Again, that judgment as to what national standards with reference to IPSAS actually means. We see quite a range of variation there, and clearly the closer that a country is, the more it makes use of IPSAS in its framework, the more comparable its financial statements will be for other countries. So in terms then of next steps for the index, one of the remaining activities in relation to the 2020 numbers is that we do intend to add access to PDF versions of the accounts for as many countries as possible to the what's called the global impact map. So if you want to have a look at the actual results for 2020 and the projections for 2025 on both dimensions, both the basis and the framework, you can actually go to that website on the IFAC website and you can have a look at both. And those are listed on a country by country basis together with interactive maps. And we're planning to add links to the most recent set of accounts to that. So that's the immediate short-term work that we plan to do. The next update, we're not certain yet whether it'll be 2022 or 2023. Clearly it feels premature at this stage, only having recently completed the 2020 index and the 2021 status report. But there is a clear commitment that we will carry this on. I think there's no doubt that the index has now established itself after those two iterations as an important information tool for many users around the world. And I think it's important that we carry on with that. I think there's no doubt that it's most effective where we work with partner organizations. And I think as we had some experience with the 2018 index, actually it works very well if you have a regional event. That tends to incentivize people to update their returns. And it also makes a good topic for debate and discussion within the event. So I think we will look to try and coordinate the next update with events. We will want to extend the evidence trend. I think the 2021 report was much more authoritative because we actually had the 4 data points: 2018, 2020 actuals, projections for 2025, forecasts for 2025 and projections for 2030. And I think the more we can plot points on that graph going forward, so plotting an intermediate point for 2022 or 2023, I think will give us very good evidence of that trend data. In terms of the questions, I think the feeling from the team was that the tighter, more focused questions that we had this time round actually worked reasonably well. So we wouldn't anticipate major changes in either categorization or wording or whatever going forward the next time we update that, the jurisdiction. And we would intend to expand the coverage further. I think, as I showed you earlier on, we do want to get better coverage in Africa, also particularly in the Middle East, but in Asia. Ironically, what that may mean is actually some slippage back, because a number of those countries that we don't have data for may well be on a cash basis at the moment. But I think it is important that we get this as definitive as possible. We have stated an intention that we would start to expand the index to cover other areas, sector, municipalities and other types of organizations. I think there would be big challenges to that, just in terms of the very different structures that you see in jurisdictions around the world. But also, I think we would, I think there are big challenges, practically speaking, in doing that. So, that's very much something that at the moment we would rather get the processes further embedded and expand the coverage. I think that's the priority for next time round. And with that, I will conclude the introduction to the index. Again, to thank everybody that participated in the gathering of the information for that. At that point, I will hand back to you, Dimitri, and take any questions that there may be.
Yes, thank you, Yun. We just got our first question. So I will ask Jose to help us with this short session. We have a few minutes, so let's see if there is any questions.
Okay, we have our first question for Ian. That is, would it be the case to establish a global strategy to disseminate the use of accrual to manage public accounts from an economic point of view? The follow-up is, I see that accrual is essential for accountability, but there are still few decision-making experiences. What do you think about that?
So I think both are very good questions. I think, you know, certainly as you know, if I speak from an IPSFA point of view, we can't mandate the adoption of standards in individual jurisdictions. That is a decision for individual jurisdictions. I think in terms of a global strategy, clearly it is very important, the increasing support that we are seeing from organizations like the World Bank and IMF for the usage of accrual. And also particularly the much greater emphasis now on the use of international public sector accounting standards as the basis for accrual reporting. So I think that is really important. You do also start to see greater endorsement at a global level. For example, the B20, the sort of business equivalent of the, or part of the G20, endorsed the use of accrual and IPSAS as the basis during last year. And I think those sorts of pressure become really important. I think also the other thing, the other area that I would like to see more pressure coming from is the global investment community. Government bonds are a very significant component of the capital markets, bigger than equities actually. And I think as they start to see the accrual reports being published, then they will start to demand that information. And I think that will be an important driver. So I think not a global strategy as such, but I think that increasing acceptance and interest and demands for the information will be important. The second part of the question, usage in public financial management frameworks and budgeting, I think that's something where you do see gradually increasing uptake of accrual for public financial management. But I think it's, if you like, I tend to think of it as, I think accrual budgeting is perhaps where accrual reporting in government was 20 years ago. So at that stage, you had a relatively small number of jurisdictions that were using accrual budgeting. That has started to grow. I think there is no doubt that actually if you get good quality accrual information for financial reporting purposes, then you can use it as a better basis for making decisions on. And if you integrate that into your budgeting process, as well if you use your accrual information for government finance statistics purposes, that then feed into macroeconomic decision making, I think the benefits of the investment are really seen. And on a practical basis, actually, if you are budgeting and reporting on the same basis, it means that data handling is much easier, and actually it becomes a lot easier to control your finances because you then understand the full economic substance and you are managing day to day and controlling on the same basis that you are reporting and being held accountable to at the end of the year. So I think it's a natural trend, but inevitably you need the good quality information that you get through financial reporting first, and then you can make that transition.
Thanks, Ian. Dimitri, do you want to go to a question from the panelists if there's a question? Otherwise, I have another question.
If I may, maybe I can ask another question and then pass the floor to you again. in case a country or jurisdiction detects an inconsistency in the result of the report or index, what is the best way to communicate and rectify these inconsistencies?
So I think if there are questions on that, perhaps the easiest way would be, Dimitri, if you were able to act as the sort of focal point for collecting those questions and concerns, and then we can pick those up as a block. I think the main thing I would say is, going back to what I said about data quality, as far as possible, we are looking for actual evidence in terms of published accounts in particular, but also other supporting evidence in terms of transitions planned for the next few years. So the more evidence that we can get access to, the better. But if you're okay, Dimitri, to act as the focal point, and then we'll look at those questions. We can't reopen the 2021 status report, but as I referred to, there is that the website, and we would certainly, if there is a valid concern in terms of either 2020 or 2025, we could certainly make a change to that. And then also, as I said, there will be the 2022 or 2023 update, and we would absolutely want to use that better information for that.
Sure, definitely, Jan. I can do it, at least for Pulsar countries. Jose, back to you.
Thank you, Dimitri. So we have another question. This will be also asked to the rest of the panelists in the next session, but since you have a limited time, we will start with you. So from your personal point of view, what type of IPSAS implementation approach, direct versus indirect, would you recommend to a country that it's interested in engaging in the IPSAS implementation reform?
So thank you for that. I think it is a good question, and it's certainly a question that I myself faced as an official in a Ministry of Finance. I think from the point of view of maximising the benefit, and also in terms of accountability terms, and also from a credibility and a comparability point of view, direct implementation of IPSAS is really what you should be aiming for, because clearly what you're then doing is using internationally developed standards directly, which means they're not then susceptible to any local decision pressures and so on. So I think, personally, I would recommend using IPSAS direct. I think that will maximize the benefits. Having said that, and this goes back to my personal experience as a Treasury official, Ministry of Finance official, I do recognize that there is some reluctance to, if you like, outsource your control over your financial reporting framework to an international board. And I think that's where probably the second, point would be really to use indirect adoption. Now, if you do use that, I think you can use that process credibly, but what you do need is clear criteria for any changes that you make in terms of to the IPSAS, and clear accountability for that. So certainly the sort of process that we had in the UK was we had an advisory board, and it made an annual report to Parliament each year. So I think a clear, transparent process like that. It may be that actually you take that route to begin with. So that going back to the Philippines, actually, they have taken that route, but they found that actually they have ended up essentially using IPSAS directly, and actually then they're just making a change to their legislation now that will move them on to IPSAS direct, because they've gained the confidence in the use of the standards that they can move to that. So I think that would be my answer to that question. So for maximum benefit and accountability and transparency, IPSAS direct, but then you could go for the endorsement process, but a clear process with oversight and with accountability for that.
Thank you very much, Ian. Dimitri, back to you, except there's any other question from the panelists.
Thank you, Jose. If there is no more questions, I would like to thank Jan for this enlightening presentation, and thanks Jose for facilitating this short Q&A session. Now I would like to ask Andres to share his views on main challenges and lessons learned from implementation of accrual accounting reforms.
Thank you, Dimitri, and thank you and congratulations to Ian for this report. It's indeed a very important update on the stage of progress of implementing accrual accounting, but more particularly also IPSAS. And I think this is very valuable and also helps actually a group of countries like PSA countries to perhaps make a stock take after a couple of years on where they stand and where they are going to. So very much appreciated to have had this presentation. So now I would like to share my presentation. This is really about the sort of main challenges and lessons learned. So you have seen the hard figures and facts in Ian's presentation, where countries are grouped into categories like cash, modified accrual, or full accrual accounting. My presentation will rather focus on what are the main challenges and lessons learned on that way to implement accrual accounting. So it's not that we have different levels, but really what are the good practices and what are maybe the more difficult practices on this way. And as we have seen, this is still the way many countries, including the countries in the region, are going, because most countries or many countries have indeed a change over the next 4 years until 2025, and yet another change over the next 5 years until 2030. And so they are on that way. And therefore, I think the purpose of my presentation is to highlight the main challenges and lessons learned. Now, really successful reforms, and Ian referred to the fact that unfortunately some reforms get stuck, and that's probably the difficulty we are also facing in a few countries in the region, that actually we are at the point where the reforms are a bit stuck and perhaps need to be kick-started again or jump-started again after a while, and therefore I think it is a valuable consideration to have a look at what are the success factors for such reforms. Now, I'm really starting with political capacity. This is something which cannot be stressed too much. Really, political capacity is important, and this is sometimes not so intuitive, because people say, well, it's accounting, it's technical, it's in standards, and it's maybe complicated even, and politicians don't understand that, but they have to understand it. I mean, that's the point. You have to convince your government to support such a reform. Of course, the minister or even the parliament will not have to understand the details of each and every standard, but they will have to support the reform. And I think that's the point I'm trying to make, that you need some strong political support in doing the technical reform, which is then done, of course, at much lower levels. But nevertheless, you need financial resources to do it, but you also need non-financial resources. For instance, you need really the support of government staff, and not only in the accounting section of the finance ministry, but really throughout the ministry and even beyond, even in line ministries, which have to implement the standards by the end of the day. So it is absolutely key from our experience that you need political support, and that right from the beginning all through the process to the very end. Then the next point, and this is, as you can see, this is narrow going down here. So this is really a sequence. I think once you have gained the political capacity, the political support. It's also important that you have institutional or organizational capacity. It's not something you can do just by having, for instance, a very convinced finance minister, but not having a team who is doing the work on the ground. So definitely you need some organizational capacity. It's not something which comes automatically, but something which needs to be structured and which needs to be defined in a project. And of course, this should also include governance and monitoring of the reform process. So it should not be something which is then locked into a black box and only visited again a couple of years later. But you need to monitor the reform process, and don't be shy also to criticize perhaps some work which is delayed. I mean, that happens to every country. I remember one of my first countries I was supporting in implementing IPSAS was my home country, Switzerland, and I can tell you in the project meetings we quite often had a relatively large number of our traffic lights. We had traffic light symbols, and we had quite a large number of activities sometimes being on orange or even on red because we had some delays, we had some issues. But really we needed to address them and name them in order to be ready to address them. Then the next, and perhaps that's a bit of a surprise to some of you, that the technical capacity only comes next, only comes third, because obviously everybody knows you need some IT, you of course need some technical elements of accounting, such as charts of accounts. That's absolutely critical for the success of the project, but that's really not the first thing you should do. And also there we have seen some experiences in some countries which have purchased a wonderful and rather expensive software, but actually didn't know how to use it. Of course, that was not of any help. So that's why we are saying better only define the technical capacity after you have defined the political and institutional capacity. And finally, you also have to develop human capacity. But again, the humans, I mean, they most of them want to use what they learn. So if you give courses which are purely theoretical, they will probably forget most of it until they really need to use it. So it's probably more useful if you focus the training at some later stage, at least the massive training of the entire organization at some later stage when the technical capacity as well as the institutional capacity is already available, because then people can start using what they learn and don't have to put it on the bookshelf. So this is really a sequence which in our experience is to be maintained, and this is sort of symbolized by these two charts you can see now on this slide, which are also featured in a WorldBank publication actually of this Pulsar group. So you might be familiar with this. We have seen that often projects which start with technical and human capacity are actually doing quite well at the beginning, but then get into problems at the later stage. Whereas if you clarify political and organizational issues, you should then have probably an easier task implementing technical and human capacity and finally implementing the standards. This is probably also what Ian referred to when he said that, well, sometimes we see that the standards are actually in place, but they are not implemented. I mean, there are certain countries which have a sort of adopted, and that happens quite often in direct adoption, I'm afraid to say, all the standards, so legally they are all binding, but they are not implemented. So that is quite critical that you maintain that sequence, which I have just proposed on the previous slide, which you have seen before. Now, if we look at IPSAS in particular, so actually the previous two slides, they are equally true for any standard. So it doesn't matter whether you implement IPSAS or any other international standard. Now talking about IPSAS more specifically, of course, one of the key questions, and you already asked the question in the question and answer session to Ian, is direct or indirect adoption. We all understand indirect adoption goes through national standards, whereas direct adoption is basically an approval process of the international standards. And of course, it's tempting to do direct adoption because obviously it's much easier. You don't have to write national standards, and it's therefore also quicker. So actually, direct adoption brings some quick wins. It also doesn't have the risk that the standards are actually different from the international standards because they are equal to the international standards. So direct adoption is appealing in many ways. However, in my experience, and I think this is perhaps also a learning process of myself, I feel that in many countries, actually, indirect adoption has been an advantage. And why that? Well, because in particular, the political and institutional issues are addressed early on. If you start writing national standards, if you start defining an own normative basis, you need some staff doing this. So this is resources you need. And so this is perhaps the first time you really need the support from the finance minister, at least, or even from the cabinet of ministers, if you need such resources. So they need to approve the respective budget, and then they need also to approve the appointments of those people working in that area. And of course, that's very important. So once you have approved institutional capacity at the political level, this really helps also for the next steps to come. And as a matter of fact, the other thing that helps is that, well, the normative work is not limited to standards. I think that's quite important to recognize. Of course, the conceptual framework, as well as the standards, they can be taken from IPSAS because they are there. But then you need some accounting policies. You need a chart of account. You need interpretations. And sometimes you need some non-binding guidance, some examples which relate to your country experience. So in my experience, it's much more likely that you will have the policies, chart of account, interpretation, and guidance ready if you go down the indirect route, because you already know about the normative basis, and you know that you have to develop normative basis. On the other hand side, quite often, direct adoption limits itself to the conceptual framework and standards and gets stopped here, and that's not sufficient. My second point on IPSAS adoption, and my second recommendation really is that it is a multi-annual project. So not really in that region, but in other regions, we have seen some over-ambitious people. I have to say like that because some people thought, well, we can do that in a year or two, and that's not gonna happen. I have not seen any country which has done it in a year or two, even if it had been a really high capacity, well-organized country with a lot of experience. So you need more time. Typically, you need 5 to 7 years. And that includes, of course, a rigorous preparation. Some people would say, well, but IPSAS 33 is defining the transition period to 3 years. Now, my recommendation is really to spend a couple of years, probably 2, 3 years, 4 years even, on a rigorous preparation, but then shorten actually the transition to 1 year. So let me explain that. I think it's better to have some time to reflect, to discuss the issues without too much time pressure, and define very clear measurable milestones you have to achieve. So I don't see too much advantage to rush through preparation, to go through that too quickly. On the other hand side, once you have defined the normative basis, once you have configured the systems, it's very difficult to sort of spread the transition over 2 or even 3 years, because the systems are ready, and then you have sort of a mixed situation that some is implemented and the other parts are not implemented. So if you're well prepared, I would advocate to transition then very quickly in only 1 year. So really the recommendation is to spend a larger part of those 5 to 7 years on a rigorous preparation, but then on a quick transition once the preparation is completed. And my final recommendation goes towards the technical capacity. Very clearly, there is no IT solution from the shelf. So of course, those who sell IT solutions say, well, I name it SAP, Oracle, PeopleSoft, whatever, is capable to implement IPSAS. My experience is, yes, all those systems are capable to implement IPSAS, but have to be configured. And that's the problem. So if they come from the shelf, they are not ready to produce IPSAS-based financial statements. They have to be developed in that direction. And that is possible. So numerous countries have shown it is possible to develop them in that direction. But again, that needs some time and some effort on the ground. So that's why I'm saying it doesn't come from the shelf like in a shop. And then lastly, and I think probably Saheo will also perhaps refer to that, it's quite important. Accounting is not an isolated thing. Countries are using the accounting information to prepare financial statistics. And of course, that needs to be borne in mind, that actually you also need to have the basis for your statistical information out of that IT system. So that again implies some configuration work, in particular at the level of the chart of accounts, in order to prepare such information. So by the end of the day, yes, I mean, I would recommend more indirect adoption. I think I'm strongly advocating a rigorous and relatively lengthy preparation, but then a fast transition. And yes, the IT configuration is critical and has to be developed on the ground. With that, I conclude my presentation, and I'm of course happy to take your questions, and I'm also happy to stay on if you have any questions later on. Thank you very much.
Thank you, Andres. I saw a quick question from Ivona. Maybe we can take it, Jose, and later on we focus more on the panel's questions.
Sure.
Perfect. Yes, the question from Ivona is, what are the key issues in implementation of accrual reform based on survey or other information? And she explains that her guess is that for ICA countries, Europe and Central Asia, the issue is political capacity, low priority, lack of interest to increase transparency or of debt, liabilities and assets. But of course, there are also issues in institutional, technical, human capacity. And the question would be how to overcome these constraints worldwide.
Well, as I said, I mean, it's probably something you have to overcome in each jurisdiction, in each country, at least. When you look at political capacity, I mean, it's not something you can overcome worldwide. You have to talk to the politicians in your country, in your jurisdiction, and convince them to support such a reform. And also the institutional setting is quite diverse. So even within the Pulsar countries, they have quite a diversity of institutional settings. So for instance, in some countries, they do have a strong tradition of accounting methodology. So they have a strong accounting methodology department, for instance, in the Ministry of Finance, which helps for the normative work, but which might not help that much, for instance, to develop the information technology. So then you might have to improve the capacity, in particular for IT. Whereas in other jurisdictions, that's not the case. So probably it's quite hard to have a recommendation which fits all purposes beyond what I did in my presentation, to mention some success factors. And I think that's where I have to leave it, because then you need to analyze in each country and need to design carefully the project.
Thanks, Andreas. Back to you, Dimitri.
Thank you, Jose. Thank you, Andres. That was very interesting presentation. For our last part of today's event, I would like to ask Akmal, Arman, Livia, and Sahe to join me for a panel discussion on the role of the multilateral development agencies. We will start with Akmal.
Thank you, Dmitry. I'd like to tell a little bit about the ADB. The Asian Development Bank envisions a prosperous, inclusive, resilient, and sustainable Asia and the Pacific, while sustaining its efforts to eradicate extreme poverty in the region. Despite our region many successes, it remains home to a large share of world's poor population. Around 263 million people living on less than $1.90 a day, and around more than 1 billion people living on less than $3.20 a day. ADB assists its members, partners by providing loans. We also provide technical assistance, grants, equity investments with the aim to promote social and economic development. We maximize development impact of assistance by facilitating policy dialogue, providing advisory services, mobilizing financial resources through co-financing operations that tap official, commercial, and export credit resources. I'd like to start with some maybe website. We put everything on our website, so I'll just share the website instead of presentation. Let me share it. Okay, I hope you see it. So this is on our website. I wouldn't run the whole animation on how the project cycle runs at ADB. Just tell you the general picture, how it works out. It all starts with country partnership strategy, where we have regional cooperation strategy, country strategy, and how it embeds within ADB vision and mission. We make sure that this country partnership strategy is driven by our counterparts at usually ministries of finance. Once the country partnership strategy is developed, and this is usually a long-term or mid-term strategy, depending on situation, it's usually for 5 years. Then individual projects are developed, and those projects, they may have different modality, different ways of being executed. So you can find this information on our website in more detail, and more than welcome to contact ADB counterparts in your countries. Let me show you some of the modalities. Okay, just a second. Okay, so our financial products, they're quite diverse. We are shifting from LIBOR-based loans. Starting next year, we wouldn't have LIBOR-based loans anymore, I guess. We having more local currency products, depending on availability and interest from our counterparts. And we have certainly concessional loans as well as products. The modality may be different depending on what we actually trying to accomplish. For infrastructure projects, it's usually project loans. We have some sector input or policy for sector input, then it's a sector loan. For projects with certain financial intermediation impact, we have financial intermediation loan. The type of product which may be applicable for IPSAS implementation or any change in financial reporting standards in the country, introducing it over several years, may be either policy-based lending or results-based lending. That's the lending provided based on the results achieved by policy dialogue. One of the, let me open the next, just a second. One of the examples I wanted to show from ADB member country, it's a country partnership strategy which has been approved not a long time ago, 2019, for Armenia. If you look at this document, and again, this is public information, you will find that the main focus for any country partnership strategy we have is to align strategic objectives that ADB has, key development challenges that the country faces, and government development agenda. So if IPSAS is part of your government's development agenda, you're more than welcome to start dialogue at country partnership strategy stage. And this is how then we can bring the result, the product which would support you in implementation. In some countries, the ask is minimal to help with drafting roadmap, and we also help with this. For example, in 2019, we have developed under regional technical assistance a roadmap for Uzbekistan. Initially, when we prepared this technical assistance in 2018, the ask was to help with cash IPSAS. It was surprising, but anyhow, we certainly looked to support our counterpart, and we included that output for Uzbekistan was output number 2. But once we started to implement the project, we've seen that accrual IPSAS, that's what's required, and counterpart actually agreed with that. So we jointly with our counterpart, that's the Ministry of Finance of Uzbekistan, prepared that roadmap, and we are at the stage now to ask Ministry of Finance if we can disclose it and provide us a knowledge product so other countries may benefit from having actual hands-on experience of Uzbekistan in preparing such a document. So I think that's it from my side, and I'll be more than happy to discuss any questions you may have on a Q&A session. Thank you, Dmitry.
Thank you, Akmal. Arman, it's your turn to share the options we have at the WorldBank.
Thank you, Dmitry. Actually, Akmal, thank you, Akmal, for demonstrating and sharing ADB's experience. So it will save some of my time because we have similar products. Hope you can see this, my slide on the screen. So the role of the WorldBank. So the bank instruments are quite similar to ADB's, which Akmal presented. So we have investment project financing, we have program for results, which are targeting, this is like more specific projects. Of course, it connects with the TPFs, or we call policy financing, where we look into the legislation, regulation, and these type of policy matters. As it was discussed today, there are so many interlinkages, so we look into a more packaged approach. We also provide technical assistance, advisory services, or analytics, so specific analytics to the government counterparts. We also provide trust funds, which are provided by the bank directly, or we are implementing the trust fund, or they could be also country and government implemented trust funds, but that is grants. We also provide very popular reimbursable advisory services, where the country governments just reimburse our costs in providing advice to our government counterparts, and this is becoming one of the quite demanded area of activity. And of course, we have our regional programs, and we talk about Pulsar, PEMPAL. Many participants know what is PEMPAL about. In ECA region, we have PEMNA Focal and others in other regions globally. So these are our bank instruments. What is our role? Where we see our role here? For those instruments, the bank as a major knowledge bank, because we position ourselves and we try to share our knowledge, helps the government to advance public sector accounting reforms. When we talk about public sector accounting reforms, we primarily understand IPSAS, or IPSAS used as a reference framework. So here we are tackling the quality of public sector financial reporting, and for also decision-making purposes, as was raised today, it's about increasing the overall level of transparency and accountability in the client countries. Particularly, that's more important on the debt reporting these days. It's improved overall performance of the public sector, as clearly public sector accounting and accrual implementation leads to the improved performance of the public sector decision-making, of course, and accountability. And people's factor, that is human factor, is building capacity and skills in the public sector accounting. So we try just to connect those. So that is on the bank approach, we are providing an integrated solution. We try not to address a single element, because as was presented today and discussed in our Pulsar event, in our knowledge products, they are all interlinked. So you will not succeed if you are only developing legislation, or you are developing chart of accounts, or only looking at some technical or human aspects. You need to approach from the holistic perspective. Connecting, first of all, it's about knowledge. What are the best and good practices applicable to our countries? So we're trying to share those. We are building up on the work already done by the World Bank, by donors, of course, by the countries themselves. So we're trying just to clarify what is the starting point for the reforms. And holistic approach to PFM. So we are not only looking from the public sector accounting IPSAS, but we look for the GFS, we look from the program budgeting or budget reporting perspective, we look from the managerial reporting, where we look from the, as indicated, from statistical. So we're coming from much broader aspects, and we connect to other aspects. It's political support, legislation, it's about human resources, and for example, integrated financial management system as a key element to succeed with reforms. So we're coming from more packaged and broader and more interconnected, holistic, integrated solution approach. On top of that, on country level, we have also our regional programs just presented as an Pulsar, as we have many observers and guests on this event. So a Pulsar program is a good example of how bank supports our 13 countries beneficiary in ECA to advance PSA reforms, public sector accounting reforms. It's about peer learning assisted network, including high-level officials. We reach out even to the ministers to get their political support and increase awareness. Developing knowledge products to help the beneficiary countries and share good practices. There are many good products available on our Pulsar website. Suggesting solutions for advancing PSA reforms, so it's very specific, targeted solutions to our countries, and developing many other useful materials which our member countries can use for the way forward. As for the bank's role, actually, we also have our RAPID toolkit. It's a report on the enhancement of public sector financial reporting. This is a diagnostic toolkit which we used in the past for assessment of the compliance of country public sector accounting environment and framework with those of the international, that is IPSAS. Now we are advancing this tool, and we are developing a new tool. It's called Pools, and we are in the actually in the quite advanced stage of this Pools team, the program development, which is developed under our Pulsar program. And this is going to be a scoring-based tool, which will also provide a much more comprehensive assessment of public sector accounting, accrual accounting implementation, looking into much broader spectrum of the PSA framework, and also it will be a scoring-based tool, and will link to the PFA framework as well. So that will be an integrated tool, and that will also help the countries themselves, first of all, to understand where they are with accrual accounting reform implementation, and track the progress, and potentially to compare them with the peers. So this is on the WorldBank side. Dmitry, back to you. Thanks.
Thank you, Arman. Livia, it's always good to hear from our EPSAS colleague.
Thank you, Dmitry. I will share my screen. Can you see my presentation?
Yes, we can see it.
Thank you. So it is my pleasure today to give overview about EU programs supporting member states' government accounting reforms. Mostly, I will cover financial support to member states on different levels with different objectives. I will briefly mention support given directly by Eurostat to member states for the EPSAS project, but also wider Commission support provided by technical support instrument and the most recent recovery and resilience facility. As you may know, in EPSAS project, we are working on harmonization of public sector accounting standards in EU, encouraging the use of accrual accounting. Our main activities could be divided in 4 main streams, offering to member states technical and financial support in government accounting reforms. For example, on a technical support, includes exchange of best practices. We hold 2 expert group meetings with all member states per year, preparing technical documents such as conceptual framework, first-time implementation guidance, and other papers on most relevant accounting topics. And in cooperation with contractors, various impact studies on lessons learned from accrual reforms, cost and benefits, and many others. From financial point, in Eurostat, we provide grants to member states targeting public sector accrual reforms with strong EPSAS flavor. Since 2014, Eurostat co-financed 13 projects in 8 member states. These grants were relatively small, but offer significant support, especially at initial phases of the reforms, but also at the later stages. From 2017, this financial support for member states was enriched by another initiative, the Commission's Structural Reform Support Service, which concentrate on more wider range of reforms, including various public financial management reforms. SRSS was replaced by DG Reform in January this year, and this brings us to the next slide on technical support instrument. It is actually successor of Structural Reform Support Program. Compared to SRSP, technical support instrument offers bigger budget and supports much wider reforms in public sector with close links to EU policies, aiming at modernization and increasing the administrative capacity of the member states' governments. In fact, this TSI is covering technical expertise, supporting the reforms, and not funding the reforms directly. This slide offers an overview of how many reform projects are being supported on public reforms in individual member states and per policy area. As you can see, the biggest areas of interest are growth and business environment, revenue of public financial management reforms, and public administration reforms. Technical support instrument covers large spectrum of areas and topics. The current slide offers the main projects which are supported in public accounting and finance management. Among others, here are also included IPSAS and EPSAS-based accrual reforms. Third group, Recovery and Resilience Facility, is offering much bigger scale support. It is completely new initiative in response to COVID-19, focusing specifically on large-scale financial support to both public investments and reforms to accelerate the recovery and to make member states' economies more resilient and better prepared for the future. And we cannot, of course, forget investment in green and digital transitions. Some concrete requests cover digitalization of public administration and public services, quality and sustainability of public finances, more efficient justice, budgetary frameworks, shared government data centers, and many others. Mention the countries which we know have built the reform of government accounting system into their recovery and resilience programs includes Italy, Greece, and Portugal. And this brings me to the last slide, which offers summary as how a recovery and a resilience facility works. The facility entered into force in February 2021, and it will finance reforms and investments in member states until December 2026. It offers in total 723 billion euros, which were divided nearly in half into grants and loans. To benefit from the support, member states have to submit their recovery and resilience plans to the European Commission. Most of them are already submitted. The funds are already available for member states, and some pre-financing was already distributed. So with this, we could conclude that the public sector accrual reforms indeed support the increase of administrative capacity of the member states in general. They are closely linked to the EU policies. And finally, they go hand in hand with the digitalization of the EU governments. And just some useful links for those who are interested. Thank you very much for your attention.
Thank you very much, Livia. Sahi, this is the first time you are participating with us, hopefully not the last one. We're looking forward to hear the role of the IMF in reform related to public sector accounting and IPSAS implementation.
Thank you very much for the opportunity, and it is an honor for me to participate. Thank you for the opportunity to discuss the role of the IMF in these accounting reforms. So I'm going to share my screen with you. Let me just get that up and running. Can you see my screen?
Yes, perfect.
Thank you very much. So in this presentation, I would like to cover the role of the IMF in accounting reforms, and I would like to refer to two aspects of the role of the IMF, namely our role in conceptual work around accounting reforms, as well as our role during operational work. And then I also would like to briefly refer to challenges for the future with regards to these accounting reforms. I think everybody will agree with me that these accounting reforms are quite often seen as quite an uphill battle. And it's wonderful that we have an opportunity like today to reflect for a moment on where we are coming from, take stock of where we are. And here I must say, as Ian was presenting the results of the index, I was struck by the fact that I can vividly recall my first seminar that I attended, where New Zealand and Australia introduced their new PFM framework based on accrual accounting. And at that time, it was absolutely revolutionary. And here we are today with a picture that is quite different. So I think we should not forget how much progress we have made. And I think to some extent, today, in today's world, accrual accounting are almost seen as an essential part of a well-structured public financial management framework in member countries. But then, of course, it's also good to think about the future and the challenges that lies ahead. To start off with the role of the IMF, let me first say that I think the role of the IMF got momentum in accrual in the world of accruals got momentum with the 1993 System of National Accounts release, which was the first system of national accounts based on accrual principles. From that 1993 fiscal release of the SNA, Government Finance Statistics Manual 2001 were prepared based on accrual basis, but Government Finance Statistics Manual were basically only prepared using the information that was contained in the 1993 SNA. The update of the 1993 SNA, however, subsequent to that, has led to the creation of a task force on harmonization of public sector accounts in October 2003. And I think this was more or less the first time that people start to think about what are the similarities and the differences between the SNA, the GFS, and accounting for public sector. This task force on harmonization comprised of many international organizations, but it was chaired by the IMF. And the objective of this task force was primarily to decide exactly what are the differences between all these frameworks, which of those differences can be resolved in the update of the SNA and subsequent GFS manual. And the little figure that I have on this slide clearly depicts the world that we lived in those years. Because in those years, people were very much thinking that there's this big divide between public sector accounting standards and government finance statistics that are used in fiscal analysis. And we often, from the side of the IMF, propagated the fact that there's no need to choose between whether you're going to adhere to IPSASs or whether you're going to adhere to GFSs. To the GFS, you basically need both, because we need the IPSASs, the accounting standards, to form the basis for the statistical reporting. And without IPSASs, quite often the statistical reports need to be compiled on the basis of surveys or estimations, and of course, therefore, would be less reliable. So this is a message that the IMF has constantly started to preach in our work with our member countries. And now, why is it that my slide doesn't want to move now?
Try to click on it.
For some reason, there we go. Sorry for that. Let's then just briefly touch on the role of the IMF in accounting reforms at the conceptual level. The Task Force on Harmonization created collaboration, which culminated then in the 2008 SNA and the GFS in 2014. The big product of the Task Force on Harmonization created a full list of differences between SNA, GFS, and accounting standards. And several of these issues were actually resolved in the 2008 SNA and subsequently in the GFS. I'm thinking here about an issue like the System of National Accounts did not recognize military equipment as assets, which was a bizarre outcome of the 1993 SNA. Those kind of things were resolved. But on top of that, what we have done in the GFSM 2014 is to add an annex in which we compare IPSASs and statistical basis of reporting, and in which we showed countries that, you know, these things are not worlds apart, that you need to use the counting data for your statistical basis of reporting. But also we have shown them that in cases where there's still unavoidable differences between IPSASs and GFS, there are measures that you can take to actually harmonize those two systems. This type of collaboration on conceptual work continue. The Task Force on Harmonization had a finite life, and subsequent to that, we have created the Government Finance Statistics Advisory Group. The advisory group comprised of members of many international organizations, including the WorldBank, IPSAS-B, OECD, Eurostat, etc. But also it includes some of our member countries, because we felt that our member countries that are actually closer to the fire can provide a lot of information on the difficulties and the problems that they experience with implementation. So the collaboration also continue with the IMF having an observance status in the IPSAS-B, which means that when new standards and by IPSAS-B are being developed, the IMF has a voice there and can provide some input into those standards. It also resulted in IPSAS-B actually formally adopting a policy according to which they consider the statistical basis of reporting when they develop new standards, to see what kind of requirements we have in the statistical basis of reporting and how these can be accommodated in the standards. IPSAS-B has created a dashboard of similarities and differences so that we can continuously keep track of what differences remain between the statistics and the accounting basis of reporting. And currently we are preparing discussion notes for the next round of updates of all the statistical manuals, including the System of National Accounts and the Government Finance Statistics manuals. And of course, this list of outstanding differences between statistics and accounting are being considered in these notes and ways to try to even minimize the differences going forward. So in conclusion on this conceptual work issue, I would say that this symbiotic relationship between the world of the accountants, the world of statistical compilers and analysts, and the world of public financial management reformers is at the advantage of all the professionals and to our member countries, because we are creating a better and a stronger system in which these things actually talk to each other. If we move on to look at the role of the IMF in accounting reforms through our operational work, I would say that in this case, our influence is more indirectly in the world of the accounting. But the IMF support work in this area through our operational work in various ways. We support it through our surveillance work and financial support to our member countries, and I will explain that, as well as through our data standards, capacity development activities, as well as other ad hoc advice, research and analysis that we do. Let's look at how we support through surveillance and financial support. This slide is quite dense, and I'm not going to bore you with all the details of it, but I thought it will be useful to have it at hand. In the Article of Agreement of the IMF, Section 5, members are required to furnish the IMF with information such as being necessary for the work that we conduct. Initially, the focus of that information that was furnished was primarily focused on balance of payments information and GDP data, growth data. But over the years, it was a realization that fiscal data requirements developed and are essential for the surveillance work. And gradually, over the years, the data requirements with regards to the institutional coverage, the coverage of flows and stock positions of member countries, the classifications of the data that member countries submit, as well as the basis of reporting, gradually moved more to more stringent standards, to such an extent that these days we encourage surveillance data to cover at least the general government sector based on accrual accounting, with classifications consistent with accrual IPSASs. And of course, the statistical basis of reporting flowing from that. Section 3 of the article agreements for Article 4 allows surveillance of member countries. And here again, the fiscal data requirements was tightened over time. Initially, member countries were allowed to furnish the IMF with fiscal data in their national presentational format. Whatever fiscal data was available was used. But over time, the board of the IMF had done several reviews. first, they have taken, there was a proposal that the GFSM framework should be used for that data that is used in surveillance. In 2010, the board actually took a decision that the framework should be used by all surveillance teams. And we have subsequently done 2013 and 2017 reviews of the way in which our members actually do furnish the data in line with the GFSM framework. And through those reviews, we learned that indeed member countries have started to provide their data in a better format based on better accounting principles underlying these data. We also have Article 5, Section 3 of the IMF to Articles Agreement, which deals with the conditions governing the use of funds from the IMF. Member countries in need of financial resources are often subject to conditionalities for the use of those resources. And often these conditionalities relate to a lack of proper fiscal reporting, in which case, of course, we recommend those countries, and quite often the countries are required to improve the fiscal reporting based on international standards. So again, I think through these requirements that has grown over time more strict, we have made a contribution to governments moving closer to using international standards. With regards to the data standard initiative in the IMF, again, this standard resulted from the financial crisis in the 90s. The Special Data Dissemination Standard was established in 1996. And these standards originated from the fact that there was a realization that if data is provided and there's not a good methodology underlying the data, then you really don't know what's the quality of the data. Also, there was a realization that in some cases, if you use the data without knowing what is the methodology that was used, you can actually draw very wrong conclusions from such data. So both the Special Dissemination Standard and the General Dissemination System, which is a development system, was established. In the latest development in these data standards is that the enhanced data, General Data Dissemination Standard, align data categories in line with the required data categories for surveillance. And these standards, of course, then helped countries or forced countries to improve the quality of the data and the underlying. In all of these cases, governments are required to disclose the metadata. And in terms of the SDDS, the requirement is, for instance, that governments need to use government finance statistics framework, and they have to, the government finance statistics framework need to be based on administrative records close to proper international accounting standards. And as you can see from this graph of the history of the data standards, more and more member countries have started to actually subscribe to these data standards, and the quality of these data standards has grown over time. With regards to capacity development, or quite often in other forums, this is known as technical assistance, we provide capacity development assistance to countries either at the request of the member country or alternatively at the request of our country team. And when the country team requests such assistance, it's usually because they have detected some deficiency in the data that are being reported to them for surveillance, or otherwise the country team would actually also request our capacity development functions when they negotiate new programs with countries and they want to put into place a specific conditionality related to fiscal reporting and fiscal accounting in those program conditionalities. Our CD is provided through various diagnostic tools. Excuse me. For example, we have a fiscal transparency evaluation. And one of the aspects of a fiscal transparency evaluation is asking about the quality of the accounting standards that are being used in a country. And the objective of the fiscal transparency evaluation is to detect areas in which fiscal transparency principles are not being used. And in all of those cases, we of course make recommendations for these countries then to start employing these better standards in those cases. We also conduct public investment management assessments. Similar case, public investment reports, asset registered, reporting on assets of government needs to be based on proper accounting standards. And if a country does not adhere to those standards, we will make recommendations on these. And then specifically in the later years, we have developed a fiscal risk toolkit, which includes various instruments. For instance, the latest addition to the toolkit was a COVID-19 fiscal stress test. We also have a state-owned enterprise health check in the tool of fiscal risk assessments. We help countries with PPP fiscal risk assessments to a tool that we call the PFRAM that I think was developed in collaboration with the WorldBank. So these tools are being used, and in all those cases, the tools depend on information coming from accounting systems of government. And in all of the cases, again, should the underlying data not be compiled based on international good practices of accounting, we would make recommendations that the entities or the excuse me, member country should move towards international accounting standards, the use of international accounting standards. In addition to the diagnostic type of missions, we conduct topical CD missions. And in these CD missions relevant for this discussion, we would provide assistance on topics such as accounting reforms, building standardized chart of accounts in many countries, the debt management practice and debt reporting practices in countries, as well as fiscal reporting in general. And this CD support is provided either through single country CD missions. In some cases, we have projects that we employ in collaboration with other institutions, such as, for instance, DG Reform. And we also have several workshops and seminars and training courses that we run that also provide information to countries and help to build capacities in our member countries. The role of the IMF in these accounting reforms is also further supported by ad hoc advice, research and analysis that we conduct. Such ad hoc advice would be provided during specific economic events. For example, the recent COVID pandemic. In response to the pandemic, our director of our department quickly came out to say that governments have to do what they have to do to mitigate the risks of the pandemic, but they must be sure to keep the receipts. And following this slogan that he sort of embarked on, we have created several conceptual notes and working papers helping countries to understand how, for instance, their interventions following the pandemic should be recorded in the proper way based on statistical and accounting standards. We also conduct research in broader topics. For example, we have done a lot of work on public sector balance sheets, which is a good example of such research. We have conducted the analysis that further helped countries to identify the gaps in their reporting, but also to illustrate how public sector information, balance sheet information could be used. We have created a public sector balance sheet time series for 38 countries that are currently being updated. And we have created it from publicly available information. What was the benefit of this public sector balance sheet work? First, it illustrated that in many cases where countries argue that we cannot compile a balance sheet actually they can compile a balance sheet because they already have some of the information to be able to compile balance sheets. But the fiscal monitor that followed this analysis also illustrated the usefulness of the data. It, for instance, illustrated what happens if you look only at the liability side of the balance sheet of a country, and how your analysis will differ when you at the same time also look at the asset side of the balance sheet. It clearly also helped to identify reporting gaps that some countries still have in their accounting framework. And it provided an order of magnitude of the public sector balance sheets, some information that many countries didn't have before this exercise. The results emphasize the importance not only to look at the performance information, but to have that holistic view of looking at the performance information as well as the financial position of a government, specifically when you start to look at sustainability of public finances. This work has evoked a lot of interest in our member countries, and subsequently several member countries embarked in conversations with us to help them to also look at what their balance sheet looked like. And we are working with many countries on this effort, which also then give us an opportunity to tell them, you need to have full set of accrual accounts for doing this kind of work in the future. Lastly, I would like to just quickly share with you my view on the challenges that we have in this area. One of the first challenges is some old school thinking about fiscal analysis and decision making that remains. Quite often governments are interested in the next 4 years during which they are in power, rather than to look at a longer term solution for their accounting and reporting problems. Unfortunately, the traditional thinking about fiscal reporting prevails in many countries. I had a country telling me that my cash in, cash out type of fiscal analysis has served me well for 200 years. Why would I change it now? And unfortunately, that is a mindset change that we need to work on through raising awareness. Many accountant generals or accounting officers in countries continue to focus only on the reporting needs from the perspective of the accounting standards, forgetting about the other reporting needs that their very costly and very expensive accounting system should be servicing. For example, if they just focus on the accounting standards, quite often they forget that by just making little tweaks or additional disclosures in their financial statements, it could serve the needs of the statistical community, or it could serve the needs of the public financial managers in a country better. So that is another mindset change that needs to happen. And as Ian rightly also referred to earlier on, we find that quite often countries adopt the new accounting standards, but for various reasons, they don't follow through with actual implementation of those standards. Lastly, in our view, the limited resources for implementation continue to be a problem in many countries. Unfortunately, many of our member countries do face a challenge to determine priorities, and quite often accounting reforms is not one of the top priorities in these governments. We find that accounting reforms for sure are costly. The IT and the staff constraints in governments are high, and sometimes that constrain any developments, and much of the developments quite often need to happen either with the help of consultants or external experts. And often there's a lack of knowledge in countries. And specifically, I would like to mention there's a high level of lack of knowledge of this harmonized reporting view, where people think more holistically about the public financial management reporting requirements, statistical reporting requirements, and accounting reporting requirements at the same time. So I think probably us as international organizations would have to do a better job of cultivating the next generation of accountants, fiscal analysts, and statisticians, making them aware of this harmonized reporting needs, and for them to continue to do the good work that we have done over the past 20 years. With that, I would like to end my presentation. Thank you for your attention. And of course, I'd be happy to take any questions as needed.
Thank you very much, Sahe, for this comprehensive presentation. We don't have much time left, but I would like to pass the floor to Jose to see if there is any questions.
Thanks, Dimitri. Well, we will select only one final question for the panelists, and that is, what would be the best way for the countries to approach your institutions for PSA related support? So we can start with Akmal.
Yeah, thank you. Very good question. We have ADB resident missions in each member country. So the first contact person would be the country director. We are in very close contact with ministries of finance. So please get in touch with our resident mission. And certainly once we see opportunity jointly to provide such support, we will do that in various forms. Thank you.
Thanks, Akmal. So let's go to Arman.
Thanks. On WorldBank, actually, we have country offices in all Pulsar countries and many other countries globally. And in each country office, we have at least financial management specialist or governance specialist. If this is about technical matters, please have a prior discussion on technicalities with respective specialists. And then you can also raise it through the formal channels with the Minister of Finance or Ministry of Finance to the WorldBank country manager, as we have country managers in all the countries. This is, and if you have any challenges or any questions, please come back to our Pulsar team for Pulsar countries, and we'll direct you to the relevant officials and colleagues. Thanks.
Thanks, Arman. Livia?
My presentation was mostly for member states countries, and this is not really my area of expertise, but I know that the European Commission is offering also support to non-EU countries. They have different programs, such as a program for enlargement and neighboring countries, macro-financial assistance for non-EU countries, or international development. You can read about this more on European Commission webpage if you type in international economic relation. Or if you are interested in something concrete, you can contact the EU delegation or representation in your respective country.
Thank you very much, Livia. And finally, Sage.
Thank you. In many member countries, we do have residential representatives. Member countries can discuss their needs with those residential representatives. Also, the Article 4 team does regular, usually annual visits to countries. Any needs that the country may have can be discussed with the mission team of the Article 4 team, and they will convey the needs to us. And lastly, a direct letter to the director of the Fiscal Affairs Department explaining the needs and the requirements that you have can also be done. Those will then be taken on board when we determine our work program for the next financial year. The other forum that we also have that you can make your Minister of Finance aware of is the annual and the spring meetings, during which we discuss with country teams their technical capacity needs. And during those meetings, Ministers of Finance or their representatives can also convey their needs to us, and we will take it on board. Thank you very much.
Thank you very much, Sage. Dimitri, back to you for a finalization and closing.
Thank you, Jose. Thank you to Akmal, Arman, Livia, Sage for this extraordinary panel. I would like to ask Arman to proceed with the closing remarks for this event.
Thank you, Dimitri. Thank you, dear participants, distinguished speakers, and guests. Of course, I would like to start thanking Ian for this great the job they have done with the index, IPSFA index, and to FinCop and EDICOP for this joint event organization. So as we can see, the index covers 165 jurisdictions, and that was significant work and quite useful. In terms of the work, it was collecting, verifying, and analyzing the data. These are status report, progress made, and what the numbers which we see is very interesting. So currently we have cash 30%, accrual 30%, and partial accrual 40% of the countries that is transitioning, or just we are using the partial accrual accounting reform. Of course, we learned that there is some gray area. I mean, some countries which were not assessed, and that is they're going to be tackled as well. It was also very interesting to learn today on the overview of the PSA forecast for 2025, which says that from 30% currently, we will go up to 50% of countries with accrual accounting, and indicative projections was very interesting. It goes beyond 70% by 2030, which of course raises expectations from the stakeholders and also for all the people and our colleagues who joined this event, on all of us just to deliver on those expectations. Same on Pulsar countries. It was very interesting to learn where we are now, and also the progress and expectations and plans of Pulsar countries, which are very clear. We're moving towards accrual quite substantially. So that is what we can see also globally, that there is a clear trend towards accrual accounting. One important aspect which was referred to was about quality of information, which is referred as important because expectation is to take it broader, going beyond only financial reporting or even accountability, but take it to the decision making and more use of financial information from broader economic decisions. There was very interesting discussion about direct and indirect. So with ideal model to be a direct model, just for maximizing benefits and accountability point of view, because countries directly use the IPSAs. At the same time, we've also observed that in majority of cases or many cases, the countries use indirect, which help with the political ownership, because through the indirect, they adopt legislation, regulations, respective accounting manuals, policies, and those require a lot of investment of time and efforts and engagement of key stakeholders from the very beginning, ensuring that there is a buy-in in the process. And this is where we see that many or majority of countries follow indirect process. Also, it was very interesting to learn from our speakers about successful accrual accounting reforms, and that is the comprehensive reform model, which was Andreas also referring to. It's about political capacity. It was raised repetitively, which requires costly financial support and non-financial support. It's institutional and organizational aspect or capacity, which are arrangements, structures, processes, which are key as well. Of course, it's about technical aspects, which was raised. It's chart of accounts, but most importantly, integrated financial management information system, which is key for success. And of course, people, human capacity, which should be in the core of those reforms. So it was also referred that there is no one off-the-shelf IT solution or off-the-shelf IT solution ready. So it all needs to be configured. So we have consolidated a single platform for statistical reporting, budgeting reporting, performance accounting, financial managerial reporting purposes. And it was very clear today that all IFIs are clearly supporting our country government counterparts, client countries, including ADB, IMF, and the WorldBank. They shared all the options available, and they are all available to support our countries in these challenging reforms. It was also good to hear that EPSAS is progressing very well from Libya on the implementation, because for Pulsar countries and for ECA regions, this is another driving force to advance reforms. So I would like just to look forward to providing support from the Pulsar program level. And again, I would like to thank all the speakers and participants and guests for this very good and very useful event, and look forward to seeing you at our next Pulsar event. Thank you very much. Dmitry, back to you.
Thank you very much. Thanks again to all the speakers and presenters who joined us today. Please stay safe and have a great rest of the day. Looking forward to see you in our future events. Thank you.